Good afternoon, good morning, and good evening to our global DeepQcast fans. You have your regular moderators and attendees on the line over here. We have Carlos Zendejas and Matt Reed and Robert Ridzek in the house. What's going on, gentlemen?
Hola, amigo. I resent saying just regular. I think we're all pretty goddamn exceptional.
I mean, yeah, you're right. I mean, it was more like a cadence factor. Irregular. It's like, you know,
fair enough.
Mini meeting.
Fair enough.
Yeah. Like I'll have the regular, you know, this like okay. I'll have the regular phenomenal filet mignon, you know.
There you go. Nice recovery.
It's good. No, Carlos,
you know how to appeal to a boy from Nebraska, which is referred to me as a beautiful cut of meat.
Meat potatoes. A way to a Nebraska man's heart is through his stomach.
Yeah, you know, there's a reason why when Warren Buffett, as he did this weekend, flies people into Nebraska, he brings you to some dingy steakhouse in the middle of like downtown Omaha. So
yeah,
here's to shitty steaks in Omaha.
Speaking of lands of nature, we can hear a little bit of the lawn blower outside your place. A little sounds of nature.
Fantastic. Well, I'm gonna go mute on the mic then, and when I'm needed, I'll join.
It's not too bad.
No, it's good.
Carlos, what do you got? What do you got drinking over there?
Well, today I'm mixing things up a little bit. I'm going with a June Shine.
I love those.
A little hard kombucha. So spring is around the corner. We are we're getting ready for getting out of the dark days of dark beers. So I've got a nice little festive mango flavored hard kombucha.
Not too fast though, Carlos. Still got. I know it's like it is technically the first day of spring. This is my last, as it is the first day of spring. This is my last dark beer in the refrigerator. So I'll have to go with the lighter. June Shines are my favorite though. Hard kombuchas, I love it. It makes me feel good, like a probiotic. Not only does the alcohol kills the bacteria in my stomach, and then the kombucha helps replenish the stomach biome after
the circle of life.
Yeah, it's like a circle of life in a can.
Yeah. It's good.
What you got going over there, Matt?
Right now, just water, which is not ideal. I'll have to go fix
Matt, your English ancestors are rolling in their graves right now.
I know. I have a Guinness. I just I haven't. If I'm going to get it now, I'm getting it now.
That's well worth the time spent.
Isn't the English definition of water beer? I didn't realize there was any. I didn't realize there was any distinguishment between the two.
Beer or whiskey, I think, each qualify as water. If you go to a pub in London and ask for water, they'll give you a lager.
It's like the four food groups of water: whiskey, beer, tequila, and I don't know.
Yeah, something tells me tequila is not the most popular thing over in the UK, but definitely whiskey, beer, and sure, let's even say that Guinness has its own sub classification.
I had this as a nod to Ireland for the Paddy's Day on Friday.
Oh man!
But then went to watch Six Nations rugby on the weekend, and so now I retract the nod. Very, very upset with that game. Don't know if you saw it.
Was like a 7 a.m. kickoff?
No, it was afternoon, but England got destroyed. It's not.
Oh.
You went into the city to watch rugby with all of the DB expats.
Nice. No, this must have been a huge. The guys must have just had out the whole bar.
Yeah, there's a few people there. That's good.
Matt's also entering the stage of his life where he's learning that hangovers now last multiple days.
Yeah.
It's great. After one beer.
Yeah, I mean, I wasn't going to drink, but then I was like, I think I will. It already feels better.
It's been a busy week. Yeah. Yeah, it's been a busy week. I think you need a little something to take the edge off a little bit. Not too much going on, guys. Man, I was.
Nothing's been happening at all, has it?
No. I definitely needed a beer by Friday and wind down a little bit. Man, this is a wild time, starting from Sunday all through last week, right? Pretty nuts.
I will say this: apart from the massive bond moves we had last week, and there's some obviously bank stocks have been annihilated. S&P is kind of like fine. Like it's as if what crisis is happening, and I'm just wondering like if that's going to keep. What other news will come out until it will really start to snowball. But we haven't really seen risk on assets really take a hit yet, which is either like well done to the Fed and governments for kind of trying to tackle this early on, or I'm not saying they've done a good job, by the way. I'm just saying they've stemmed the outflow from banking into the rest of the street. So
either that or the trade of like what's bad for central banks is good for risk assets is counteracting the effect of this is just general horse shit in the markets.
Yeah, it's insane. Like I think I was chatting with some of the guys over the weekend, and they were just like, no one's holding risk at all. It's just when you've got multiple standard deviation moves going up, black swan events, it's just not worth it at all.
It's almost like a form of quantitative easing, isn't it? With Fed kind of coming in and bailing out banks. I was reading an interview from Bloch.
Robert, not a bailout. Not a bailout.
Oh, I'm sorry. Did I use that? I'm sorry.
Don't say the word bailout. Not a bailout.
Taxpayers' money have not been used. There's no bailout.
Can you only BO?
You're going to say the word. You're going to say the word bailout.
I said BO.
Stop it right now.
I said BO.
Listen, if you say the word bailout 3 times in a mirror in a dark room, Elizabeth Warren shows up behind you and stabs you.
I tried that last night. It keeps me company, How would you? I mean, so.
Oh, it's a bailout. It's totally a fucking bailout.
Oh, so you can say it.
Yeah.
So you can say it. I was trying to find a witty rebuttal, and I came up dry.
Although, hold on, I want to be very clear here, because I think this is really, really, really key. The number of people in the world that proved on Twitter over the last week that they do not understand the difference between bailing out depositors and bailing out shareholders is astounding to me. Because let's be very clear, I am pro bailing out depositors, because that underlies trust in the U.S. financial system. If people feel like it is incumbent upon them to become bank financial analysts and understand the balance sheet of their local bank before they, put in, deposits in their checking account, then we're all fucked. Like literally, we're all fucked. If you become a shareholder or a bondholder of a risky bank, I'm of mixed feelings about this. I generally think you should not be bailed out, but I think that in the progressive rhetoric, we need to be very careful that we don't discourage investment in banks as an asset class altogether, because that in and of itself, while politically convenient, saying, "Oh, like those risky bailout, those risky shareholders, those equity holders, guys, like that could also just be like retirees. That could be, that could be people who hold, bank stocks in their portfolio." And the problem that you have with that is that if you tell the American investing public that investing in a bank means that like you can just have your entire investment wiped out over the weekend because the regulator is concerned, then like good luck finding anybody to provide capital to banks. And so you actually create this like really nasty side effect where, yes, you've bailed out the depositors. That's fantastic. Shareholders should take more risk. I think that's like incumbent upon everyone to understand that. But most importantly, like, let's also kind of just be mindful of the second and third order effects where, let's say you're a regional bank, you all of a sudden have to like post a lot of collateral at the Fed to get access to financing for liquidity. You're kind of stuck in this rock and a hard place. More often than not, the right answer is for these banks to recapitalize themselves, right? To get more tier one liquidity, like, preferred stocks, actual stock. But they're not going to be able to do that. So because we've been so quick to wipe out shareholders and preferred stockholders, I'm concerned that like all of these regional banks are going to need liquidity and they're not going to be able to find liquidity. And so now all of a sudden they're very reliant on just hitting up the Fed. And now the Fed is literally the only backstop in the economy for the banking sector. So maybe I'm a little doomsdaying a bit, but like, yes, it's a bailout. Bailouts are separate for different classes of people. I think depositors should be bailed out. I think shareholders likely shouldn't be bailed out, but we also need to be conscientious of sort of like the second order effects of setting the precedent that they should be wiped out and everyone's cool with it.
What do you think about the FDIC and their deposit limit? So there's been some push to have that rate limit increased
to infinity.
Just to stop, huh?
To infinity.
Infinity and beyond. Yeah, I think So we're pushing for at least double, three quarters of a mil, somewhere in that ballpark. And the idea is to just stop the outflows from these regional banks, into this two-tier system now, into the main guys. So do you think that's going to be enough? Is it too late? I think it's haven't
necessary.
Seen balance sheets since. I haven't seen any balance sheet statements yet since all the outflows, right? I'm very curious to see how. We know First Republic had been in trouble, had to be bailed in by the other banks in the US, and it's kind of like, well, who else is in trouble now?
Yeah, I hadn't seen anything yet outside of obviously Credit Suisse, which has been in the news quite a bit. But it's funny. I was talking with some folks that aren't finance people about this, and I'd mentioned this about the bailouts, and that if you don't bail out individuals, you risk a crisis of confidence with these regional banks, and it's the depositors that are getting bailed out. But his point was, the average individual doesn't have more than $250,000 in the bank account. The average individual can't even meet a $400 unexpected bill. So the real people that are getting bailed out are big corporations or businesses or wealthy individuals, which, to his point,
bullshit on that. Total bullshit. No, seriously, total bullshit.
Mm-hmm.
And here's the reason why: regional banks don't serve mega corporations, right? You think of a regional bank, we're talking startups, we're talking small and medium-sized local businesses, right? These are the people that are the primary users of regional banks. So if everyone's like, oh, $250K, that's so much money. Maybe if you've got $250K sitting in your personal checking account, but the majority of these uninsured deposits, right, are small and medium-sized businesses. If you just do the math, assume you've got, 10 to 20 employees, right? You can very easily hit $250K just by having a couple months of payroll on the books. I wouldn't call that irresponsible. I wouldn't call that a wealthy, it's like some rich, fat cat sitting around. I think it's very plausible that you can have small and medium-sized businesses that are sitting around with more than $250K in a checking account, because that's what they need for operations. So, yes, there probably are some people that qualify as sort of wealthy people, high net worth, large mega corporations. But if you look at the depositor base on a lot of these things, we're talking for Silicon Valley Bank, it's majority startups, right?
To add, a lot of the mega corps are not going to be at regional banks anyway. Small banks are there. They're going to be at already with the JPs, the BAMOs, all of those guys.
Yeah, and I think if you think about, okay, what value add does a regional bank give to to our society as a whole? I can tell you right now, as a small business owner, startup owner, whatever you want to say, right? Obviously, we're crypto, but I've seen this in a number of different industries. You don't just walk into JP Morgan. Maybe they'll give you a checking account for free, but you don't just walk into JP Morgan and say, yeah, I'd like a business loan, right? Like their cost of capitals are like, cool, I can give Google a $500 million line of credit because I bank them, or I can give you a $500K line of credit. It just doesn't make sense for them. So
and it takes me just as much work to underwrite, right? Like there's
Exactly.
like, my cost is the same, so I just want scale.
So this is the reason why people go to places like, Fifth Third or First Republic Bank or Signature or, Zions Corp, M&T Bank, you name it, right? Like it's because they get a degree of coverage. They get a degree of hand holding. They get a degree of a banking relationship that allows them to have access to credit markets that you typically wouldn't get if you were just dealing with like a big box bank, because they just don't have the bandwidth to give a fuck about every small, medium-sized business that's doing maybe a couple $1 million in revenue. And so, like, I think people like to generalize things and say, oh, over 250K, what are you complaining about? You're over there sitting, sipping on champagne and eating caviar. It's like, no, well, maybe I've got, 10, people that work for me. I need to make payroll and I need to have cash on hand to cover my expenses. Like, I call that pretty responsible. So I think it's an easy, but somewhat of a lazy argument to make, in my view.
Yeah, I mean, this person isn't this. They're not finance individuals. It was an interesting to get a purview of how just the layman is looking at this. And one of the I didn't disagree with him on that point, but I disagreed with him on a different point. Was saying, okay, hypothetically, let's say that they did.
And by the way, I'm not trying to call your friend an idiot or lazy. I'm just saying, like, I've heard a lot of people prognosticate and make these types of things. And it's not that black and white. Like 250K sounds like a lot of money until you run a business that have to meet payroll.
Yeah, and well, look, and I think we're also dealing with the echo of the global financial crisis, right? Where that was a very different catalyst for those things that were held, but that behavior has kind of been ingrained in people's minds, and it's kind of an anchor. And when they read a headline, I think they naturally gravitate towards other behaviors that weren't necessarily related to these events. The thing that I had mentioned to my friend, though, was also the knock-on effects, like the second and third order degrees. Like if they didn't bail out the depositors, what would that mean for regional banks? I mean, you would have a massive crisis of confidence, massive floods out of those regional banks. All of them would go bankrupt, and then you wouldn't have financing for small communities and entrepreneurs. And who would suffer? Those regional, those mom and pops, those regular individuals, right? So,
not to sound like I'm like on a baby kissing politician tour, but that really is the engine of growth. If you look at most studies they've done in terms of like American economic growth, the majority of that comes from small and medium-sized businesses employing under 100 people. So, without that, you actually knock out, a large part of the American economy.
They have got some pretty cool tools though now. Like, I'd seen this with Betterment before, which is like a brokerage firm. And they do have like a treasury facility, not treasury, it's just a savings account, but they'll sweep it across different banks. So they try and maximize your deposit insurance. And we bank with Mercury. We recently just got told that ours have been increased to like 10x, like more than that. I think it's actually quite a bit higher, 20x even, the 250K limit, because they just distribute it across to the banks, which I guess ideally is good for those banks that participate as well. They've got big names in there too, so it's pretty widespread, but you'd much rather have 10K coming out as opposed to 250K in one go, because they can just withdraw it uniformly across the pool.
But I think this goes to
coming out of it.
This goes to the original point, which is like, should the FDIC insure more than 250K? My answer is yes. Yeah. I think you should.
I mean, they basically are through that alone. That's why I was kind of curious, because I was like, do they even need to? If you can split your deposits, then. But you need someone in the middle to do.
At that point, it's sort of like if you're a regulator and you don't want to see people lose their money because of a crisis of confidence, right? And you also are confident in the regulatory regime that classifies what banks need to have on hand to cover deposits, then you should feel confident making sure that FDIC covers all deposits, because otherwise, basically, what you're saying is that you are better off finding 10 banks and splitting up, $2.5 million over 10 banks than you are just having one bank that you trust, which is just a gigantic hassle for most people. When in actuality, it's like, how does that affect the banking sector? Right? Like it's probably actually better that people have a banking relationship with, one or two or three banks versus like being reliant on, spreading it out across lots of things and constantly being on high alert and understanding the bank balance sheet across like a number of different financial players. Like, contrary to popular belief, most entrepreneurs are very busy keeping the lights on, and don't have time to be banking analysts across like 10, regional banks in order to keep the lights on. So, I mean, to me, it's kind of a no-brainer you do that. I mean, in the same way that, what if we arbitrarily selected back in 1930 that a proper amount to give, retirees was like $300 a month and never adjusted it for inflation? It's like we created the FDIC, during the Great Depression, and we've kind of like arbitrarily selected 250K, and said that's the number. Like, great. You can just easily say 2.5 million. You could just easily say 20 million.
Yeah.
At the end of the day, the most important thing is that people have confidence that if they put their money in a bank as a depositor, that it's safe.
Yeah. I was kind of curious. How do you feel about, and this is a crack, right? That started playing out in the banking sector. A lot of this is a result of rising inflation. I feel like the first sector to be hit was technology. All these tech firms going through layoffs, these like ultra long duration businesses that were relying on cheap financing, especially vulnerable to rising interest rates because they were so reliant on cheap financing to keep the lights on. A lot of them didn't have a lot of revenue to pay for increasing costs of capital. So they started to go through challenges. That then kind of like bled over to SVB, which had their run on the bank, and it kind of bled into other regionals. Do we feel like, I don't know what it is, but it's kind of interesting to think about what may be other areas that we might see, other cracks we might see in the in just the global business markets as the rising interest rates bleed through into other parts of the economy.
I think we're already starting to see that. I mean, it starts in speculative parts of the economy like cryptocurrency and tech. Pretty soon it ends up into regular regional banks in middle America that are more quote like stable ordinary businesses. We also are starting to see it have a contagion outside of the U.S. now, where if we think about sort of the effect of what happens when you have a run on the bank in the U.S., right? That's a U.S. liquidity problem. But because the U.S. is the world's reserve currency, when we raise rates, right, it actually makes dollars less accessible to other people in the world too. And something like 80% of all financial transactions in the world are done in dollar terms. So there's a massive shortage of dollars. And so now, today we saw this headline where the Fed basically said, all right, now we're going to team up with the Swiss National Bank, the Bank of Japan, the English Central Bank, and also the European Central Bank. And we're going to set up these like dollar swap lines, which is basically just like the Fed loaning money out to other central banks so they can cover their needs. And we're only doing it for our allies that we love and we trust because, we're all bros. But that effectively means now that for every dollar that the Fed prints, the dollar now needs to print $5 for its closest allies. And, we saw a run on the bank happen in Credit Suisse this weekend. Now, like slightly different reasons than what we're seeing in like the U.S. regional banks. But I think that the key here is less that you should need to understand all of the aspects of bank balance sheets, but more so that the market is finding the weak members of the herd that are straggling behind, and it's summarily killing them all one by one. So like, you can be sick or lame for whatever reason, but if you are sick or lame and you are part of the global financial like community right now, open season, you're dead.
Yeah. I was like, I'm kind of curious to see how this will play out within the Fed rate hike decisions, right? Like, how much of this is already going to create enough change in people's consumer behaviors? It's very well publicized.
We got a first.
I think this is. Yeah,
I was
go for it. I think you're going to say the
hint
same
of
thing.
that. Yeah, with the ECB, right? So they just were like, we don't care. So that was Thursday last week. They just did 50 basis points. Now, admittedly, that was before Credit Suisse, large bank. How big are they in investment bank terms? They're definitely top 10.
I mean, they're a SIFI. I mean, they're strategic for sure.
And that deal got put together over the weekend, as well as the First Republic Bank deal got put together at the end of last week. And yet they still went 50 basis points. So I think it doesn't change the name.
I think it was pretty gangster of Christine Lagarde. She was like, listen, fuck you. Don't give a fuck. 50 bips. Come at me, bro.
And that wasn't even the biggest
like
thing that happened in the market that week, right? The start of the week was really where rates had a massive price shock. Like the 2-year in bonds was like 60 basis point move. I think it's happened since Black Monday or something crazy back in the 80s. When I was saying like multiple sigma moves, you're talking about serious risk. Like even if you had a tiny position on, you could get run over, completely get wiped out. So and then they
can you go through that really quickly, Matt? Because I think you're probably a bigger student of the bond market than I am, but like just to give people some context of how big a fucking move we saw in rates.
You don't want to talk about in terms of
DVO.
DVO1, so that's like your risk for a 1 basis point move in the underlying bond. So for every $1 million of notional you have of the 2-year, you have a $200 price sensitivity to a 1 basis point shift. So if you got 60, that's a pretty large, thousands of dollars for just having 1 million. 1 million is like the absolute smallest you can trade anyway on some of the main exchanges, like central limit order book exchanges. So that's already like the minimum size you could do. And to have a 60 basis point shift in that is just, like I said, it's just not been seen before. And then the same with 2s, 10s, that curve also steepens. So they call this a bear steepener, where the short-term bond price skyrockets because people really want to go to flight to security. So the price skyrockets up and then the yield comes down because they're inversely proportional. And so that causes a steepening in the curve. And again, that hadn't happened since, I think, the 9/11? So it's the second largest since 9/11 for the 2s, 10s last week. So these are like just crazy moves that just don't happen. Real black swan events.
Yeah, it's interesting because like my wife had a friend over from the city and she's like, an architect. And I remember we had like a conversation about how big of a deal this was. And I don't think people really, like outside of finance, really understand how big of a move some of these things are. And I think probably, you put it in context, it's like, yeah, we haven't seen a move like this since 9/11. And then you're like, holy shit, that's actually like, wow, it's pretty significant.
Yeah, it's more than like 10 standard deviations, the move. It's really, really big. And that's kind of what people have been having to deal with trading that stuff this week. Like, I definitely don't envy. Well, I mean, crypto has been interesting as well, right? But definitely don't envy some of those moves. That's for sure.
They're wild. Touching on Matt, you touched on crypto. I mean, just kind of like circling back. We've seen Bitcoin make a massive rally over the past week. It's kind of like I've seen people talk about Bitcoin as a hedge against inflation, which it hasn't really played out. And others from the beginning had argued that it's more about a hedge about our fiat monetary system. And I feel like that view is playing out a little bit more than the play on inflation. I was just kind of curious what your views were on these recent Bitcoin price moves, if you think this is more technical factors or if you think it's related to macro events that we're seeing.
I mean, Carlos, I think you got some colour on whether retail flows or private or non-retail. What was that over the weekend?
Oh, I think, so to answer your question directly, Robert, I do not believe that the moves in Bitcoin are because people are saying to themselves, oh, this is what Bitcoin was built for. And I believe in this decentralized, great thing in the world. I think it can trade up for actually the same reason that people might have a narrative in their head, or so a different reason that people have a narrative in their head, but it can still go up. And I think, quite frankly, the reason why it is going up is because Bitcoin is a levered risk asset, and people are betting that the Fed and the ECB and all of these banks, in order to recoup their losses from bailing out all of the banks and all the depositors, are going to have to turn on the money printers. Right. So at the end of the day, really, it's a bet that the money printers are about to go burr again. I think it's convenient that it also suits the narrative of people that are, like Bitcoin and Ethereum or crypto extremists who are like, we're about to stock it to the man. Like the financial system is going to go downhill, and Bitcoin's going to be here to save the day. No, I really don't believe that. I would love that to be true at some level, but at the same point, I'm a pragmatist, and I understand that really this is just a play on people feeling like the Fed is between a rock and a hard place right now. If anything, to be totally honest right now, I think that Bitcoin is currently pricing in a complete and total capitulation by central banks. And what do I mean by that, right? Central banks are guaranteeing or backstopping a lot of these consumer deposits, which means that they're accepting banks' bonds at par. So imagine you're a bank, you bought a lot of bonds back in 2021, and you had like a 10-year duration on it, earning like 2% yield, and you thought you were pretty slick because you had depositors earning 0% on that. And you're like, great, I'll earn my 2% yield on that. Fantastic. The Fed raises rates, and all of a sudden, those bonds are now worth 80%, 70% of what you paid for them. So now your incentive at this point is just to put those to the Fed, right? And now the Fed has them on their balance sheet, and the Fed's underwater on these positions. And the regional banks now are in this really weird spot where they've got to pay interest on these loans they're getting from the Fed. So it's eating into their profits. And at the same time, the only way that a regional bank is going to be able to compete with me as a business owner saying, all right, well, I have a choice now. I can take my money and I can put it on deposit earning 0% interest at a very risky regional bank, or I can just buy treasury notes directly and earn 5% per annum. Now regional banks are going to have to increase their yields they give on deposits. And the Fed's going to have to backstop all of that. So you've got this like zombie downward spiral of these banks now that like literally can't do anything, and the Fed's sitting there holding the bag. So now the Fed has an economic incentive, right? I think there's this like great Charlie Munger or Warren Buffett quote. It's like, if you want to know the truth of the matter, follow people's financial incentives. And the financial incentive of the Fed now is to do two things. One is to cut rates, right? Because that's the only way they're going to get out of this situation. And the second financial incentive they have is to do so in a way that allows them to save a little bit of face. And so I personally think that the Fed is going to go 25 basis points. Maybe they'll pause, but likely 25 basis points, because they need to save face. They need to be like, listen, we backstopped all this financial mess, and we're really strict on inflation. And then once they get that initial one out of the way to look like a hard ass, then they can start cutting rates, and they can, get back into the zone where they're being, where they're having easing monetary policy, because that's what's in their best interest to do. That's the only way they stay alive. So I think that people right now are pricing in Jerome Powell panicking and calling in an emergency, rate cut tomorrow, or at a minimum announcing tomorrow at the FOMC that, they're going to, instead of pausing or going 25 basis points, they're going to cut by 1% or something like that. And I think that's a short-sighted move, because I think people don't really understand exactly what the financial incentives, as well as the incentive from the Fed to maintain some degree of credibility. So, short story is, I think the Fed has to do what the Fed has to do. And I think crypto market is maybe a bit more reflexive than other markets, and it's priced in just like the most astonishing capitulation by the Fed. I think they will be wrong in the short run, but right in the long term, which means I think that crypto is going to likely have a bit of a retracement over what we saw over the weekend, because people, saw all these bank bailouts and they're like, oh shit, everyone's cutting, money printers go burr, chips all in on crypto. And I think they're probably right over a 6-month to 12-month period, but they might see that position they aped into on Sunday go down 5 to 10%, and wiggle around a little bit between here and there. That's my personal view.
Yeah, I mean, like you see, I know that I was actually, you're not the only one. I was looking at, I think Gunlach, I was from Double Line. I was reading some of his interviews, and he was kind of talking a little bit about this too. Obviously he's a little more of a fixed income credit guy, but he was even saying this is a long-term bear market. I would sell into any rallies. I don't think we're out of the woods yet. He was actually pricing in. He thinks that there will be a recession within the next 4 months. So he's
wow.
dramatically increasing or front loading his expectations for recession. He thought maybe it might hit later towards the end of the year, but he thinks it actually might happen sooner.
Yeah,
and that's like kind of feeding into all of this and your comments around the Fed being forced to cut rates.
There's another aspect of crypto trading that's different now than what we've seen in almost every other bull cycle in crypto. And that is, typically speaking, the bull cycles end up with retail being exit liquidity, right? So like you start a little, like run, and then you get retail all hot and bothered about it, and they jump into the fray, right? And those are the last guys to hold the bag. But we're entering a zone now where I truly believe that retail's tapped out, right? Like you look at every metric aggregate across retail at the moment. They're taking out credit card loans. They're having a hard time meeting ends meet. They're not sitting on a bunch of like stimmy checks like they were back in 2020. So I think that on the whole, we're going to see crypto be reflexive, and it's going to react to the markets. But I think that like there's only so many times that retail can jump in and like buy these pops.
Yeah.
And we were hearing market color that on Friday the market jumped up, it hit like 26,000, and then it bust through 27,000, and retail were caught wrong direction, right? They were selling 26,000 hoping that it would go back to 25K, and then it just rallied in their face, and so they flipped long. I generally feel that like that typically means like once retail jumps in and like apes into these sorts of plays, I think it's a bit of a crowded trade at that point. So I could be wrong, but like my gut tells me that unless the Fed comes in really, really, really like conciliatory tomorrow, I think we have a little bit of a retracement in crypto. Even though I'm long-term bullish on crypto, I think this is probably the perfect setup for crypto over the next 6 to 12 months.
Interesting.
Yeah,
that's great color, guys.
It still doesn't solve the issue though of being able to spend it as well. But there's only one country that actually accepts it as tender. Is it El Salvador or Argentina? I forget. But like, you still want to be able to pay your taxes, pay your bills, and until that utility is really there. Like, I agree with Carlos. I think we've definitely not hit the high for now. There'll be some capitulation, and we've got the number on Wednesday for us to see what the Fed do. Probably 25 basis points. Anything less than we'll probably have a rally. And then some of that will come off because it'll be 25 basis points. I'm pretty confident of that.
Yeah, I think Matt's bang on, which is like for all the people that are building in this like trade where the fiat system goes to like shit and crypto moons. It's like, great, if that happens, how are you going to spend your Bitcoin? Right? Like,
There was a guy's got $1 million a million call option or something.
Yeah, like but some dude on Twitter, Balaji, is like a crypto Twitter OG, has this bet that he's in 90 days, Bitcoin's gonna be worth $1 million. Like if that happens, it's gonna be fucking like Mad Max out there. We're all gonna be like rolling around in some sort of like post-apocalyptic sort of like leather girdles and shit like that, trying to stab each other with fucking pitchforks.
Trying to come up with really cool, edgy names. Like
everyone's everyone will take turns on the hamster wheel trying to churn generating power for the Bitcoin mining stations.
Yeah, exactly. It's like, all right, cool. We don't have power, and I'm going to just hold you at gunpoint to run on the hamster wheel. Please make this Bitcoin transaction go through.
That's amazing, guys. Hey, guys, we're coming up on time, man. Any? I mean, that was pretty good. But any fleeting comments before we sign off for the day?
No, man. I think the only thing that I'm going to say is it's been very, very, very fun to watch everyone, myself included, become a accounting and financial analyst for banks over the last couple of weeks. I was joking around pre-recording that I worked for 10 years on Wall Street, and I clicked my way through lots of bank accounting and regulatory online trainings. Never once thinking that it would come in handy, and yet here we are. So it's always a good time.
Good. It's well worth it. You didn't realize at the time when you were probably in a massive headache having to click through all that, but it's funny, man.
Well, that's why doing those like trainings were always perfect for Friday morning after a client event when you were mildly hungover. You just sit there and like mindlessly click through the compliance courses, learning about Dodd-Frank.
Love it. Boys, thank you so much for joining. It was great to catch up with all of you. Talk to you in a week.
Dunzo. Cheers, boys.
Bye.
Bye.